to the Wealthworthy Podcast. I'm Trisha.
Hi, I'm Darian.
This week we'll be talking about stocks that you should invest in or continue to watch. So a lot of hype is around some of these big name, large cap stocks, and we wanted to just talk a little bit about those companies and see whether or not it might be something of interest to you. We wanted to talk about some that might be up and coming and some new launches that we are watching carefully and investing in as well. So in the realm of companies that we are expecting to do well, there are a few, including Amazon, Netflix, Tesla, Apple, and Google, right? Like those are some of the big names that have been giving double-digit growth over the years. People who have invested early have made massive sums in the market, and those are also stocks where the highest amounts that you expect, right? Like the amounts that the analysts have targeted for these stocks have been surpassed in many cases, and they continue to grow beyond what anyone could expect. I think now the one that we're all waiting for is Tesla, to see whether or not they're able to meet the earnings numbers that will come out tomorrow for this quarter. But that is going to be a huge development in whether or not the stock continues to skyrocket or if we start to see some kind of pullback in the market. Because I'm thinking that we've already priced in a great deal of the expectations around it. So we've already been looking at the fact that it might enter into S&P 500. We've been looking at the fact that they're opening these new manufacturing plants, that they're being exposed to new markets, right? Like we're looking at these different aspects and already pricing it into the market. So with the stock holding close to 1,500, we'll see if it goes much further than that. There have been some targets that are as high as 2,300, and even that for some bullish investors is relatively low. So we'll see what happens with that. But I think the fear of people missing out on what these stocks are doing is causing everyone to rush in, and there's a lot of fear that that could mean that we are creating a huge bubble. And whether that's true or not, time will tell. But we do have to be mindful of how much money we're putting into some of these, especially now. So if you've been in for the long haul, then a lot of what we're seeing now is just upside for you. And so, like, yes, it will hurt to see it drop any if you've been waiting and you're trying to be patient. But at the same time, if you are entering at this point where it's already up at the 1,500 mark, you really need to be prepared for the stock to make some continuous swings. So it might be one to get in and out of pretty quickly if you're getting in this high, especially if you're trying not to lose too much. So make sure you use any kind of limits that you can when you are making your purchase, and looking at possible stop losses if you are looking to exit the position if it does show a rapid decline. And just to put it out there, this isn't to say that Tesla isn't a great company because you're seeing the decline. It's just more so a lot of the built up anticipation that we're having to watch out for. So everyone's getting hype about it, and it might be without regard to what the actual valuation of Tesla is at its current state. So not to say that it won't be at triple the number in a couple years, but in this moment, if you're looking at it as a quick buy, then you have to be ready and understand that it's going to come with those huge swings, and you may or may not earn or lose money in the process. So be careful, be safe about it, and just understand the amount that you're willing to risk when you make this purchase if you're doing it now. If you're in it for the long haul, kudos to you, because you have earned a great sum of money. Like for me, I had purchased a long time ago, but I sold it early because I was like, oh, they're going to go private at some point, and it's like, I'll take advantage of this quick slip. But yeah, obviously holding it for the long haul would have caused a great amount of appreciation on that stock. So what are your thoughts, Darian, on those 5 big companies that people could be investing in right now?
I think it's a win-win situation. I think just when I think about it from a big standpoint and having a background in IT and marketing, just looking at how consumers spend their money and what they spend their money on. We all know with Apple, everyone loves technology, and most people feel that Apple is on the cutting edge of technology with everything they do, from the phones to the watches. Pretty much anything Apple, people are just going to go and spend their money on it regardless to whatever's going on. Like everyone wants the newest iPhone. So when you think about that, it's a win-win. And then with Amazon, it's the same way. So because Amazon offers just about anything you want online from the comfort of your home, it gives you the benefit of not having to leave, being able to get your stuff coming right to you. So you have options. So I think until another company comes along and can beat that or do just as much or even better, that's kind of where we sit. It's just figuring out, like you said before, if you've had money in those stocks for a while, that's great because you've made money, and then just figuring out if you haven't had money, which way you want to go about purchasing. Do you want to purchase the whole stock right out? Would you want to do an ETF? There's a lot of options you have, especially even when I think about some of the platforms that we use, like N1 Finance. You have the option to purchase a percentage of it, so you're not putting all of your money directly on one particular brand such as Apple, Tesla, or Amazon. So it's just all in how you want to play your card. But you have options.
Right. And that's a great way to approach it, right? Like the share for these stocks might be above the price point that you would want to enter. So using options that allow you to buy it at a fractional rate is a great way to minimize the exposure that you have, because it's easier to lose $50 than it is to lose 1,500, right? And granted, you wouldn't expect anything to bottom out if it's been on a continuous growth path in that way. But you do have to be mindful that there is a huge risk associated with investing overall. But that is a good point, right? Like a lot of these companies are sitting on a ton of cash or have huge customer bases. And so that is a setup for them to continue their growth in the long run. So right now, if you looked at how the charts have been showing their growth year over year, month over month, you can see a steady increase. Even with the dip that we've had in March, we still see that a lot of these companies, even though they've dipped a good 30-40%, like in these firms, you see it might be a slightly smaller dip than others, or they might have rebounded a lot quicker than others, because we've quickly gotten to a space where you recognize that these are going to be companies that people are using, even with us being in a modified like work from home culture, lock-in culture, whatever you want to call it, right? Where we're not able to move around in the same way that we have in the past. And even with certain stores reopening, there's still some hesitation for us to go out and really spend as much time and money in those places as we did it before. So with those companies, I feel comfortable saying that we can anticipate in the short term that there will be more growth, and if you did invest some money that you were comfortable with, you would be able to reap some kind of return on your funds. Of course, the safer option is to go the ETF and index fund route, because it spreads out that risk risk across multiple companies, but you see higher percentages when you invest in individual stocks because you're taking on more risk and those companies may be growing faster and earning more than the overall market. So the next bucket of stocks that we wanted to talk about are some that are relatively large at this point and have a rapid growth, rapid momentum in the market. And there are companies that you may have already been looking out for, but I think in this time frame, people are quickly investing money in these companies because there's been a shift from us looking at some of these retail companies and real estate companies, right? A lot of these firms that have been heavily impacted by the coronavirus situation, it makes it easier for companies that are solely online or they have a client base that is loyal to the stay-at-home culture right now. So the ones that we wanted to pay attention to were Square, Twilio, Illumina, Spotify, and then another one to watch is really Spacex. So these are companies that they have been doing well for different reasons, right? So Square, we expect that there's going to be this shift to us doing more electronic processing. A lot of small companies are already using their software, and as we continue to make purchases online, as we continue to go cashless, right? Like as we look at different ways of payment processing, I think Square is in the forefront of that. And so it's a company to continue watching and being mindful of. Twilio is an online cloud-based communications company, and people have been including it as a part of their process as well. And I think it's been doing great with businesses. All types of companies are starting to look at it as an option for their customers and for their communications. So it's been a great way for us to look at things in the cloud space in general, right? Like if it's online, I think a lot of people are thinking like those companies have a great shot at doing well. And this is one amongst those many, right? So there are others that you could look at as well. But I think with Twilio being more in a newer state, it kind of puts them in the forefront. For Illumina, that one is a genetic modifying company, right? They look at genetics and how you can modify it in a way to help prevent certain diseases and health issues that we could have. And I think that it's been a market that, like, even when we're past all of this situation, they'll be looking at it as a way to help ensure that people don't get sick from various ailments that we've had in the past. And that one is a little scarier to think about because, you know, messing with people's genes is like, it's amazing how far science has come. Let's just put it that way. But it is a stock that's been growing rapidly, and there's a lot of push behind them to be able to come up and further science in that way. So it's one that you can continue doing your research on and seeing if it's a good fit for you to invest in. Spotify, I think, is amongst the same ranks as some other companies like Mercado Libre, which is more focused on the Central America market. But I think that, you know, even when you just look at how we're making our purchases today, like either of those companies really are ones that you can think through, like, oh, they'd be able to capture people who are interested in buying online and setting up shop online and, you know, creating this new space for us to buy in that environment without having the same kind of intermediaries that we've had in the past. So I think those are good ones to look at. And then, of course, the space launch with SpaceX. They've been doing a number of trials. They've had successful launches. And I think that they have the potential, because it's a market that people aren't necessarily entering into right now, knowing that it's expensive, and, like, commercial space travel was not necessarily on the docket for a lot of people. So it's definitely tackling issues that we haven't necessarily put a ton of focus in on the past. And so it could be one that's, if you're invested for the long haul, you could see some return on, especially if there's additional progress in the market. So any thoughts on those for you, Zarian?
I think a lot of them offer different things, different resources for consumers. So it's just to sit back and watch and see how it goes, and just decide if you want to invest your money in those particular.
Yeah, so this space, I would say, because a lot of these companies haven't reached their full potential, there's more room for growth, but there's also more room for risk. So in the short term, for a lot of these companies, there could be some bumps up and down, but on the long term, right? Like, if you look at how they're performing, if you look at what the plans are for the company, what they're working towards, then that should help give you a better indication of if it's something that you would want to invest in. So looking at it on the short term, for some of them, you might see a little more fluctuation than the straight upward path that we see with some of the stronger companies that we know are doing great in terms of their customer base, in terms of their profits, in terms of earnings, right? But then you get into this space where these companies may be amongst the same ranks, but they may also have a little bit more fluctuation because they are still working to deliver on a final product. So that growth might not be as easy to recognize right away. So those are more of the research stocks that we would suggest that you look into. They have had some successful growth in the past. We see how they continue to grow, but whether you think that it will grow into the future is up for more research. And I still think that they're good ones to start with if you're looking into these different industries and trying to figure out where to go next. And of course, I wanted to talk about a 5G option as well, because I think that's an area that, with all the focus on cloud and security and online purchases, right, like 5G is kind of taking a back seat. But I think companies like Qualcomm could be great ones to look at and continue investing in as we make progress to finding out who will get to this 5G moment sooner rather than later. And lastly, we wanted to talk about some IPOs that came out recently that everyone has been excited about and that show promise for growth. And those include Lemonade and Encino. So those are two new companies that launched, well, they've been around for years, but they've recently launched their IPOs, and they've been met with tons of excitement in the market. And looking at them, they both offer solutions to issues that we've had in the past, right? Like, we've satisfied ourselves with the way that we buy insurance, which is what Lemonade is looking to revamp. But, in the way that they have changed the markets for you to be able to use AI in order to determine rates and payouts for people who purchase insurance from the company. It's much faster. It's able to use that artificial intelligence to more quickly adapt to the different scenarios that we have out there. They've recently launched pet insurance, and we all know how much people love their animals, right? So they are in a space where people will continue to look to them. And right now, their customer base is the younger generations. So as they continue to modify and broaden their offerings, I think it'll be a good opportunity for them to expand into other types of insurance. Right now, they have the pet insurance, as I mentioned, and then they have renter's insurance. But, there are tons of things that we need insurance for. And if they can penetrate those markets, if they can broaden across other countries, because right now they're focused on specific markets, but they can look into other areas as well, right? So all of that growth potential is what brought them to do an IPO in the first place, but it also allows for them to have more growth, which means more capital appreciation for the investors. So that would be a good one to look at. And the other one, Encino, is one where they are looking at how to streamline the banking process. Right. So when you're looking to, there are just many different aspects of the things that banks need to keep on record. And I think that Encino is able to do a good job at that. So they can look at the capital requirements, they can look at the different regulations surrounding banks and put it all on one platform and make it easier for banks to make decisions on loans that they are giving out. And even though that's not necessarily going to impact you directly right away, I think that anytime a company is able to more efficiently provide a service, then you have that opportunity to see growth, right? Because now you can have your people, your employees focusing on more analytical work than doing those record keeping, maintenance kind of tasks, and that will help to streamline the process, right? So I think that they are positions well, and both of these companies have strong backing from firms that we are aware of, right? Like Encino is 12% owned by Salesforce, and they're using the Salesforce platform to help them to create these efficiencies. And when we look at Lemonade, they are invested in by Google amongst a number of other companies. And so, just knowing that there are these kinds of support for them in the market gives some hope that they can grow. But of course, that doesn't alone help you to know whether or not the company is going to do well. There are tons of incubator companies that firms invest in with the hopes that it'll grow and make it to a certain plateau. And some come to fruition and some don't. So that alone isn't a reason to invest, but I think that just looking into those companies and trying to understand how they'll be able to scale over time will be helpful for you to determine if it's something you want to invest in for the long haul. So hopefully these tips give you a good starting place or a good angle on some of these companies that you've been curious about, interested in investing in, or looking at adding more to your portfolio. So with that, thank you guys for joining us, and we'll talk to you next time. Bye.
Bye.